So we're going to talk about three AI stocks that are about to explode. And one of them is one that you've heard of, you know about, but we're going to talk about it in a little bit different context. Also, the other two, one of them you probably haven't heard of, and it is one of those, if it hits, it is going to be massive. Okay. So I've got a lot here for you, a lot to share with you. And my objective with this channel and these videos is to help you make more money, expose you to different AI and different types of stocks, AI infrastructure, AI plays, but also even other great stuff. So if you haven't already done so, please check out the rest of the channel. Let's get into this. I'm going to share the exact picks with you right now. Okay. So three phenomenal AI stocks for maximum upside. Okay. So the first one we're going to talk about is one that you are familiar with, but I want to talk about all three of them real quickly. Look, as they range in risk, one is low to, and one of them is low, and it is Nvidia. Okay. Which is one I highly recommend. If you don't own Nvidia, you should. I also believe you should own some of the other major chip makers and some of the AI hyperscaler chip makers as well. But Nvidia is the one that I think is kind of low from a risk standpoint. And then we're going to talk about one that is extreme, but it has potential returns that are absolutely insane. Okay. So as I said, the first one we're going to talk about, so stay with me to the end because I'm going to share that last one with you at the end, the one that's the real kind of more long shot, if you will, but it's got a lot of interesting stuff about it. So look, in the red, Nvidia is already the largest company in the world, one of the largest chip makers out there. Everybody knows their brand, knows their name. If you take a look at their chart, 5-year 1,226%, 1 year 78%, 1 month 13%. If you look at year to date, they started the 2026 at 188, and they're trading at about 198 right now. So you haven't really missed the boat, so to speak. If you've been like, well, it's time to get into Nvidia, should I buy it or not? Hey, it's basically the same price today on May 3rd, depending on when you're watching this video, as it was on the very first day of the year. Okay, so like I said, let's jump back over and kind of talk about it. But look, what's interesting is that the AI infrastructure build out and all of the computing power that's going to be put into those AI data centers and all that AI infrastructure, it's not here yet. It's all in the process of being built. Okay. So all of these massive data centers have been announced, but they're going to take years to come online, stretching out the timeline for the purchase of the chips will power them. So Nvidia believes that global data center capital expenditures, meaning new data centers and the CapEx expenditures, will climb to between 3 and 4 trillion by 2030, up from 600 billion in 2025. You see the number. So 600 billion in 2025. That's the actual amount of money spent. But now you have all of these data centers that will start to be coming online between now and 2030. And those monies haven't been spent yet. The CapEx expenditures haven't happened. And that means that revenue hasn't been recognized yet. Some of the deals have been announced and things of this nature. Okay. But it still has a lot of upside is really the point, right? So in the yellow, if that transpires, Nvidia maintains its market share, the stock could easily double, if not triple from here. Look, Nvidia is the safe one. And I think that everybody, if you're looking at having a diversified portfolio, everybody should have some Nvidia, just like I think you should have some AMD, you should have some of the AI hyperscalers, things of this nature. Okay. That's the interesting part about this. Nvidia is like one of the ones that you need it. All right. Okay, we're moving on to this next one. Next one is Nebius. Okay, have you heard of Nebius? Drop in the comments below. Is this one new to you? So this is a little bit more risk, but not as much. Okay, so it is a neo cloud company, meaning it's focused on building and running AI first cloud infrastructure, demand for which it is booming. Okay, so they're massive booming for this. Look, Nebius believes that its annual run rate will rise from 1.25 billion at the end of 25 to between 7 and 9 billion by the end of 26. Look at that. That's a 8. Don't do math in public, right? That's an 8 to 9 billion. No, 7 to 8. There you go. I knew I missed it. 7 to 8 billion by the end of 26 rise rate going up. Now let's take a look at Nebius's chart. So a little bit interesting chart. Look at this. Year to date, started the beginning of the year at 89.95 and is at 154 now. So that's where we're at on year to date. 5-year 136, 1 year 546%. It's in the last month up 52%. You can see that a pretty massive spike up in the last year, last month. Again, it's not too late to get in on this. If you're looking at it for more of a longer term, remember some of these timeframes we're talking about, right? We're talking about massive AI infrastructure build out happening between now and 2030 and beyond, obviously. Okay. So that's one thing I like about Nebius. This is one that I'm going to be looking to add to my portfolio. I think this one's really interesting. Again, I'm looking at all of these guys as more of a longer term plays. Okay. That's how I see them. That's how I look at them. I'm not looking to get into them and get rich in the next 10 minutes, if you will. Again, I have a very kind of straightforward, diversified investing portfolio standpoint. Okay. Here's the issue with Nebius in the orange. Nebius does not have the cash on its books to fund all the expansion on its own, so it's borrowing heavily. Rising debt load could become a huge liability for the company if its all-in bet on the long-term demand for its data infrastructure doesn't pan out. Purple, still considering the massive demand as thus far experienced in major deals it's signed, I think Nebius could become an AI infrastructure giant over the next few years. So you're kind of catching this one a little bit at the beginning, right? I mean, even though there's been some significant gains that we saw from the chart, if you're looking at a more longer term gain. Now, if you're looking at kind of an investment ratio, let's say you had $1,000, I would probably put if it was me, I'd probably put 500 into Nvidia. I'd probably put, maybe 600 to 700, maybe 800, 700 to 800 in Nebius, and I'd put the rest into the last one. Okay. Because Nebius is a little bit more of a riskier play. I think because of what we talked about in this orange line right here, they're borrowing money, crazy, borrowing rate, huge liability, but that is offset by the massive demand, and they are one of the leaders. And I go back to where they're expecting pretty big numbers to grow from 1.25 to 7 to 9 billion by the end of 2026. Okay. Last one is one that I think is the most riskiest, but is the one that is very, very interesting to me. It's IONQ. So much different than Nvidia and Nebius. IONQ is focused solely on bringing a viable quantum computer to market. If it fails at this, then the stock will likely fall to zero. Okay. So this one has a lot more risk, guys. Okay. So if you look at IONQ, a lot of people are not even thinking about quantum computing right now. They're looking at existing kind of AI technology and things of this nature. But quantum computer or computing is the next wave. It's the next generation. There's a lot of issues with the technology, a lot of weird things. It has to be really cold, and a lot of these data centers where quantum computers are ran. It's a lot of stuff. I actually talked to a friend of mine last night who works for one of the major power companies that creates and is creating the power for a lot of these data centers. And we were talking about quantum computing, and he said it is crazy what you have to do to run a quantum computing system setup from all the technology, the infrastructure, and things like this. But anyway, IONQ since IPO got 300%, 5-year 300%, 69.69 right there. Year to date started at 46 and it's currently trading at 46. So if you're looking at getting into Nebius, you haven't really lost anything by not being in this one, say at the beginning of the year. Okay. So again, this is more of a long-term play and think more of a riskier play. Okay. And from that standpoint. Okay. So while that may sound scary, reality is IONQ is already a leader in its space, which is quantum computing. It currently holds the world record for the most accurate quantum computer by one key metric. Okay. But look, quantum computing has high error rates right now. It's in its kind of, I wouldn't say it's infancy, but it's in kind of infantile stage, still developing. And there's primary challenges must be overcome before the technology be broadly commercialized. But in the red, quantum computing has significant implications for the AI sector. Could be the technology needed to unlock further capabilities. I think everybody kind of recognizes this. And in the green, based on its accuracy lead, there we go, its involvement in military contracts, the risk is starting to fade a bit for IONQ. Okay, they're a top way to invest in quantum computing. If that technology does evolve far enough to allow for widespread usage, the stock has a ton more upside potential. So there you go. 3 AI stocks, kind of a really good moderate risk play with Nvidia, a little bit more risk play with Nebius, kind of that AI cloud infrastructure play, and then IONQ with that quantum computing. There's a really good range. And I kind of gave you those numbers. If you're thinking about putting 1,000 in, maybe the bulk of it going into Nvidia, less risk, longer, kind of longer value play there over time, Nebius, and then IONQ kind of respectively. Nebius maybe 300 of that 1,000, and then I would maybe put a little bit less into IONQ. Thanks for giving me a few minutes on your way out. If you will hit that like and subscribe, I would appreciate it. See you.